Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is February 23rd, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how to use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla is up $1.21, 0.6%, closed at 202.07. Post-market, we are down by 63 cents, 0.31% at 201.04, at 201.44. So let's look at what this looks like on the chart. Let's see. Yeah, red candle today. Okay, red candle. And remember our 205.15, our 205.15 resistance that we basically stopped looking at because we are currently inside the congestion zone. So it means that the stock can do anything between these two lines and it's okay with us. But yes, it's always interesting to see that 198.12 and 205.16 are always used. Look at this. This is what stopped us today, 205.16. There are no random moves in the stock market. Yes, I say that there are some random moves when we are within a congestion zone, but in fact, if we dig into a 1-hour chart or 5-minute chart, then we can see other supports and resistance that are being used. So in fact, there are no random moves, but we don't need to use that all the red candle, but made a higher high, made a higher low also. And look at the longer wick at the bottom here compared to the wick at the top. This is showing us that the buyers are winning this round. The buyers are winning this round, even though it's a red candle. Let's go see the 1-hour chart to understand how this is happening. We were into this downward channel since February 16th, going down. We discovered it really here, February 21st. Before that, we did not know. We could have thought that this is where it is by linking all of these stops here, but then it was broken, and then the real one was right here. Anyway, because this one was really a really tight channel, and really tight channels, as I say, don't last a long time. So when they get broken, then they make the real channel that lasts a bit longer. So we were into this downward channel like this. And today we broke it during the first hour. So we even opened the day at, let me see, 203. Opened at 203, super high, and went as high as 205, as I mentioned. Then we're squished down. And that's quite interesting because even though we did this, look at the stochastic, it was not over 60. My stochastic, not any stochastic, my stochastic was not over 60. So it basically meant that this move here, even though it's impressive, is not going to last. And what did happen? It did not last. So we came down as low as 196 during the day. 196 was the low. 196 today. We broke it just briefly on the third hour, but then we started going up. So green candle here. Then we broke our downward channel, but this was not to be believed yet. This was not to be believed because stochastic was not above 60. Then we had this here. We did not get stochastic over 60 after this green candle. So this is why I always tell you, when we come out of a downward resistance, when we come out of it, wait that we also get above a horizontal resistance, because even though we are getting outside of a downward channel, we could be getting cut into a congestion zone. So here, the congestion zone, we could have said the congestion zone is right here at 200. So the goal is to find a congestion zone that we could get stuck under. So 283 was a pretty good congestion zone. So waiting for that would have meant that we waited after this candle right here, this big green candle. Did not get stochastic yet, but then on that second one here, we got stochastic over 60. So right now on the 1-hour chart, this has been de-risked If we break 287, then I would use that as a stop loss. But right now, based on our criteria, this is de-risked. And if you want to enter on the 1 hour chart, that would be the time to do this. Let's go back on the daily chart. So daily chart, yeah, so basically we are still going sideways. Stochastic still good. We had our MACD break bullish. That's fine. The two lines are still above zero. It's still quite nice because of that. RSI is above 50 and the MI is still green. VIX spent 2 days above right here. So now we are coming down a little bit. So this has helped. This has helped Tesla and the stock market in general come back up a little bit. Let's see if we bounce on 2071 or if we come back in here. It would be nice. We still have this upward trend for stochastics. Today, we can see this as a temporary move down. It can continue a little bit, but the real test is going to be when we break, if we bounce on this stochastic support right here. And we can almost try to do this too here. We could be using this as support because we are making a higher low than this one right here. So this is the trend that VIX is in. And yes, within a trend, we sometimes extend ourselves away from support. We come back, extend, and maybe we are going to come back. So if we have a couple of days here of move back down, this is going to help Tesla reach 214 at least. And we'll see if it breaks the 214 resistance that we have. Dow Jones. So Dow Jones is rebounding also pretty good. No stochastic yet, but a long wick at the bottom. So the buyers came in. Nasdaq also rebounding nicely on the support. The buyers came in. So this is what we need for support. Support means that buyers are coming in at that price. People are coming in at that price instead of continuing sell. And the sellers might also be getting tired of selling a little bit. So the combination of the two gives us supports. And if we look at Nasdaq Composite, which is into a downward channel, had a nice move up right here. The big question is it going to remain above 11,565? Maybe it's going to remain this and come out quickly of this downward channel. I need to tell you guys that I will be taking some vacations. There won't be any videos starting tomorrow. I won't be there this weekend either, but I'll be back Sunday, March 7th. I will do a live on March 7th. This is going to be a public live because I do a public live once a month. So I'll come back Sunday and do a live and then recap the whole week that I will have missed. I will miss you guys. Make sure to just use the fundamental criteria that we have. If we break 187, that's bad news for Tesla. And it's becoming more and more of a bad news because we are getting close to this support right here. So if we had lost 187 here, that's not too bad because we could have been caught by this. Here, if we start to lose 187, we might be losing this diagonal support at the same time. So that's that. So 187, keep that in mind. There's no point in keeping a stock that goes into a downtrend. There's no point in doing that. We should get out and let it come down and get back in because the stock is going to tell us by itself when it is to stop falling and start trending up again. There's 214. That's also important. If we break 214, this is going to mean that we should be able to reach 240, maybe 250, and then see if we break this or if we cave in onto that. Follow our rules and you should be okay. So have a great week and we are going to talk Sunday, March 7. And I'm going to tell you, à la prochaine.